just do that. Someone's at the door, my dog's going nuts. I'm just going to ignore the door. Right, yeah, so here we are, deciphering what's happening in the world right now and how to actually trade it. So, yeah, basically what happened is FXM wanted to hold a webinar, something around the macro picture, etc., and how you can apply it on a trading point of view. And yeah, I said I could help. So hopefully you go away learning something. And this is basically what we're going to cover. We're going to try and go through things in somewhat of a oh my sorry, my dog is going nuts. I'm so sorry about that. Someone had to arrive at 2 o'clock on the dot, didn't they? So yeah, we're going to go through the wealth generation journey. So this is the biggest, I guess, possible picture and where things fit in, and then we'll go through in a more granular detail as we go on. So let's get my little doodle. You should hear my cat. Right, so let's talk about the wealth generation journey, because some people may know me, some people may not, but I think the key thing that I guess I want you guys to walk away with is that trading isn't the be end. It isn't everything, basically. So a lot of people, they get into trading or property or business or drop shipping or whatever because they've seen an advert on Facebook or whatnot, and they're sold a dream. They're sold that this is going to be, their ticket to riches, etc. But you have to understand that there is a bigger sort of a wealth generation journey that you need to be aware of. So let's just call it the wealth gen journey, and we're going to get a thinner, yeah. And it looks a little bit like this, so it goes down like this. Okay, let's have a thinner pen. So we start the workforce when we're around, I don't know, 16 to 20 or 22, depending if you go to uni, etc. And typically what happens is I'm being very broad brush, but we all fall into some sort of hole. We end up in some sort of financial hole, and then we make even worse decisions, and then we end up in a spiral of doom. And the thing is, when you're in this spiral or in this little financial rut over here, you're looking for, well, in fact, it's a sad face. You're looking for things to help, alleviate that thing. Now, get rich quick things don't work. They're more like a get poorer quicker sort of scheme in reality. And so the first thing you really need is a job. You need an income stream. You need something to pay the bills, etc. And then at the same time, or whether it's a job or a business. So obviously you need to, basically have a base to operate from, as in a cash flow. And then over time, hopefully you're going up the corporate ladder, you're earning more in your job, or your business is doing better. And the first, I think, little milestone is that you need a rainy day fund. Now, this is nothing fancy, it's nothing new. Hopefully you've all heard stuff like this before. But the way I look at it is that you should have at least 6 months worth of OPEX. So OPEX is operational expenditure. It's a business term, but you can apply it to your own personal self as well. So this is your monthly outgoings, your rent, bills, utilities, mortgage, groceries, petrol, whatever. Okay, so let's just say that your OPEX is, everyone's different. Everyone has, let's say it's $2,000 a month. Okay, so what this means is your rainy day fund, you really need 12 grand, so i.e. 6 months of OPEX, sat there in a somewhere liquid. Okay, so whether it's a current account, an ISA, hell, your trading account if you get good at trading, whatever that may be. And the thing is, shit always hits the fan. Your boiler may break, the car may crash, you may crash your car, or if you're in my case, this week we had a massive flooding on my kitchen ceiling. So there was, in between the floorboards, a pipe burst, and then we had water dripping through every hole in the ceiling pretty much. So thankfully insurance got that. But yeah, and the thing is, when you have a problem and you don't have a rainy day fund, guess what? You then end up resorting to a aggressive payday lenders, okay, with 1,000% plus APR. So yeah, and then eventually, once you got your rainy day fund set up, you'll then have some surplus cash, and then you'll have some sort of pot. Let's just call it an investable pot. And I mean, obviously that could be anything from $1,000 upwards, okay? And hopefully, if you filled up your rainy day fund and you're still earning surplus cash flow, you'll then be contributing into this pot every month, hopefully. So the thing is, most people get it wrong. They save for saving's sake. And if you save for saving's sake, you'll soon realize, in fact, after today, that you're getting screwed. Okay, you're getting screwed through real inflation, not just nominal inflation, but real inflation. So what you need to do is you need to save money to invest, and investing will grow that. And so we'll talk about the investing bit in a minute. I just want to show you some sort of little hurdles. So obviously this is not to scale, obviously, but you have two milestones. You have financial independence over here and financial freedom. Now, everyone goes on about financial independence, and I get it, but it's really not all that it's cracked up to be. So about 10 years ago, I was broke. I really was rock bottom. I made a whole bunch of really stupid mistakes. I quit my really nice paid, cushy job. I was an Air Force pilot, and then went to be a full-time trader because my ego was ruling my actions, and I lost everything with a few silly trades. And so I ended up having to get a job, yada, yada, yada. But then, so that was 10 years ago. And I obviously read Rich Dad, Poor Dad and got into the whole wealth generation journey, etc. And I was obsessed about getting financially independent. Now, it's a good milestone, but it's not your end game. Your end game should be somewhere over here, whatever that means to you, financial freedom. Because financial freedom means you have, well, in my opinion, it's F off money. You can do whatever you want, wherever you want, whenever you want, with whoever you want. And then you're properly comfortable regardless what happens in the world. But financial independence, it basically means the passive income from your investments covers your outgoings. So if your outgoings are $2,000 a month, or your investments only need to bring in £2,000 a month, and then technically you're financially independent. But are you comfy? Are you safe? Hell freaking no. So you need to carry on going up this journey. And I got a little bit complacent, once I hit here. I was like, woohoo, I'm financially independent. But you're definitely not comfortable. So just quick question here, KD, whoever, this is being recorded, so don't worry. And don't worry, there will be a full live Q&A at the end. But please do pop your questions in the chat box, and I will answer them if it's relevant at that point. So, okay, so now let's go back to your investable pot. This is where you need to decide what to invest in. So when you look at things, you have let's have a different color. You have two types of assets. You have capital appreciating assets, and you have cash flowing assets. Okay? And so what is a capital appreciating asset? So it's literally anything that you feel that you can buy low and you hope to then sell high. But guess what? With capital appreciating assets, everyone uses the world's worst investment tool, which is hope. So it's, I mean, in terms of capital appreciating assets, it's everything. It could be stocks, bonds, commodities, crypto, cars, fine art, fine wine, whatever. Anything you buy low and hope to sell high. And so there's 1,000,001 different things you can do that there. Now with cash flowing assets, it's different. There's not many things. It's basically anything that puts money into your pocket every minute, every day, every year, etc. So you have business. There's debt. So if you have capital, you can then lend it, but it's risky. What else is there? You have trading. Some people say property, etc. But the thing is, if you're running property for cash flow purposes, what you're actually doing is you're running a business. And properties are simply your widget, no different than an ice cream shop selling ice cream. So let's just get rid of that. So really, when you actually look at the big things, it's business and trading and debt. Now, I'm going to put a little caveat here, eventually, okay? Because when you first start trading, you are not going to be good. It's pretty much, yeah, it's a given. And it's no different than learning to become a dentist. You can't become a dentist after, you know, a couple of videos or a one-day course or whatever. It's a year or two of a journey, and trading, I'd say, is at least a 2-year journey, and we'll get on to that. So that is the they're the two main types of assets. And the thing is, you have to understand what billionaires do, not what they say. And when you look at what billionaires do, you'll find that they don't care about capital appreciating assets. It's all about cash flowing assets. And it's a double whammy if you do this side well, because let's say you have a business, yes, it's cash flowing, but if you do it well, you're also growing up a business that you can eventually sell over here. So that's why you should double down on cash flowing assets. So this is why I personally only put 10% of my liquid net worth, or my whole net worth actually, into capital appreciating assets, and then 90% or more into cash flowing assets. So hopefully that sort of gives you a bit of an understanding on the whole wealth generation journey. And personally, I mean, because I've got so little in my capital appreciating assets box over here, I cannot be asked to waste or park money into things that are going to be trickling along and making 5 to 10% per year. So for me, my capital appreciating assets I put into high yielding and somewhat higher risk stuff. So for me, it's cryptocurrencies. So yeah, whereas most of my time I'm trading or doing my business, or actually most of my time I'm running my businesses, and I'm also trading. So, so hopefully that bit makes sense. So Marius has asked, will the recording be available later? I'm not sure when the recording will be available, mate. I have no idea. So that's the wealth generation journey. So if you're here and you're new to everything, you have to understand that everything works if you wanted to get into property. Yeah, it works if you know how to do it properly. Business, yeah, same thing with trading. But you have to understand that trading is just a part of your whole journey. And what I do is I actually put things together. I combine the both. In fact, yeah, we'll get on to that, how I manage my trading life. But for now, I want to. Do you mind if I quickly move on to the macrometrics, because it's pretty important. I don't want to spend too long. You're here to learn about trading, etc. So. Yeah, but Marius, yes, it will be available at some stage, definitely. So Joe has asked, can an asset be cash flowing and capital appreciating? Yes, it can indeed. As I said, a business is a cash flowing asset, and it's also a capital appreciating asset, because if you carry on building the business, you can then sell the business. Just like property, you could buy a house, let it out, that's cash flowing, and then you can sell the property. So I'm not a big fan on property, especially now, because the whole market is screwed at the moment. So yeah, rightio. So let's get on to the macrometrics, because we will come back. We'll come back to this bit here and how I fit trading around my life, etc. So macrometrics. If you go to YouTube and then you type Siam Kid into the YouTube, so yeah, I'll just do it so you'll see what it looks like this. Click on Siam Kid, and then
hey everyone,
if you then scroll down, in fact in the playlists, what you'll see is that there's one called Macrometrics.
See velocity.
And this actually, Macrometrics 1, is probably the most important video I've ever made. Yet it's got bugger all views, and unfortunately, good stuff that you need to hear doesn't sell because it's not sexy, but it's really, really important. And what I talk about in this video is basically how rising stock market prices and property prices is not an indicator of economic health. So as you can see here. And I really break things down. So basically a central bank has certain levers. So they can either print currency, in bunny ears, so they don't actually print any currency. They can drop interest rates, or they can open liquidity lines. That's literally all they can do. It's normally a reactive measure of what happens in the economy. So the actual things which are the actual health indicators are, if I can fast forward in this video, it's a long video, hopefully, where is it? Is here. These are the main health indicators. So you have the currency velocity chart, which I will talk about in a bit, sovereign corporate and private debt, GDP and SME growth, the purchasing managers index, and then unemployment. And I guess actually delinquencies, bankruptcies and unemployment is more of a reaction to the main health indicators screwing up, basically. Because if these top four go kaput, guess the resultant action is delinquencies, bankruptcies, and unemployment going through the roof. Now, I'm a student of money and I'm a student of history, because all of our answers is in the past. We live in a world of ever-changing variables, but the only constant that never changes is humans. And so, like, I love crashes. I make nearly all of my money during crash periods, and so all crashes have a certain pattern. They all move in almost exactly the same way. So it would be foolish to look at what's happening right now, and let's just open up a random chart. So this is the FXCM trade station and the market scope chart. So if we just get the stock market up, let's look at the S&P 500. So what happened is that we had this, the COVID March crash, and it was the biggest, fastest crash in history. Nothing's ever hit 30% crash as fast as this one. And we've had this massive rally since. And everyone is looking at the stock market going, yeah, everything's recovered. Everything's great. But it hasn't. And it's because lots of people are myopic in their investing view or knowledge, and they look at, okay, what happened 5 years ago? And then they base their opinions over the last 5 years, which is silly. So I'd like to draw your attention back to 1929. And if we just go to 1929 macro trends, there's a really cool chart. And Macro Trends is a website. It's really handy. It gives you loads of good stuff. Now, here is this is the Dow Jones Industrial Average, so the US industrial stock market, and it's from 1929, and this was an 87% crash. So I don't use GoToWebinar, but I'm gonna see if I can doodle on the screen. So drawing tools, pen, hello? Can you see my doodles on the screen? Can you see a hello that I'm trying to write? Yep, cool, thank you. So what happened is that we had the 1929 great crash, and the first, oh my god, this is so laggy, but basically we had the first shock over here, where it basically just capitulated. It dropped, it was hovering around sort of 375, and it dropped straight down to 200, and this was a massive shock. But it wasn't the end of the game. And what happened is they invented a new thing back then, which was called QE. Now, we've heard it loads now, but everyone seems to think QE was invented in 2008 to deal with the subprime mortgage collapse. But it wasn't. It was back in the 1920s. They were like, shit, what happens now? We need to prop up the stock market. Because guess where most of the elite or billionaires, etc., held their wealth back then? And in fact, even now, it's in stocks. So they're like, shit, we need to prop it up. They came up with QE, and they did a massive stim pump, so a financial stimulus pump. And they created basically like a 6-month rally from this low to this high. And this is important. Oh, come on, pen. Come on, pen. Draw a line. Oh, my Lord. Okay. This is why I don't use GoToWebinar. Okay. And that price tag is there. Anyway, so there was a 6-month rally, And guess what the newspapers will show you? The newspapers will be like, hey, look at this. The market's gone up 50% in the last, 3 months or whatever. Because it's gone from 200 all the way back up to sort of 300. And everyone will then think, or be duped into thinking, this is economic recovery. Wrong, because what happens is the market rolls over and then absolutely capitulates. And the total loss from top to bottom, it was 87% drop. Okay, and this pattern is nothing new. This pattern has repeated throughout history. So let's get rid of these silly doodles. Let's just get my normal mouse up and delete all the drawings. Okay, so I want you to chisel this picture into the back of your brain. Okay, and now let's just have a little gander at some charts. Let's go to the Dow Jones. Right, so I've got a whole bunch of markings here, but ignore this. I'm just going to get rid of some of these lines. As you can see, I've had a little cheeky trade on today. So what's happened on the Dow Jones here is that we had the COVID crash, okay? A big old drop. That shocked everyone, and then guess what? We've had some financial stimulus. We've had all sorts of financial stimulus. And yeah, the market has recovered. Now, normally when you have this first sharp short crash, the market will cover 50%. So typically, I would say 75% of the time, it will only recover 50%. Obviously, the Federal Reserve and the US are doing all sorts of shenanigans here to really prop up the market. And if you want to have an absolute laugh, have a look at the NASDAQ. It's the biggest joke I've ever seen. As in it's the biggest bubble I've ever seen. But or not ever. It's a big bubble. So let's go back to the Dow Jones. Okay. So what everyone is now looking at is going, we're back to pre-COVID highs, blah, blah, blah. Everything is awesome. But we're going to have an absolute capitulation. And everyone is thumb and bum, mind and neutral, completely ignorant and oblivious to it. And so this is the S&P 500. In fact, these drawings, so these little lines here, I drew on the 24th of September. And what is it now? So about a month ago. September, October, yeah. So a month ago tomorrow. And the first line I drew was this one here. Oopsie. So this line over here. So the market hadn't broken out of this little compression here. Let's get rid of that. And I said that we'd have a breakout of this sort of compression, this squeeze here, and it would move up and down, and it would create a topping pattern over here. And as you can see, the market has pretty much followed my lines word for word, or line for line, almost. And we're going to have a little bit of a breakdown eventually. And what will happen, and that will then create another bigger topping pattern in itself. And here we go. We will always, so one of the things you need to learn from crashes is that the low, the initial low, will nearly always, I would say 90+% of the time, will be attacked. Nearly always. And then I see a lot further falling after that. But the high prob target is, at least the original drop. Now this is where we can use hindsight to our hindsight analysis to our advantage, because typically when we have a global crash, it happens every 8.6 years typically. At some point in the world, in some asset, there's always some sort of global crash. And when we look at these crashes, they tend to crash anywhere between 70 to 90%. Okay, and so let's just use 70%. So we can look at the highs. So I'm going to ignore this bit. This is the top of drop from here. And what was the price here for the S&P 500? It's 3,400. Okay, so we can just work out what a potential target may be. So 3,400. Let's say it's going to have a 70% drop. So that's 2,380 minus 3,400, 1,020. So what this means is, if I'm correct, we should see it's quite likely to see a collapse down to 1,020. In fact, look at this. I actually drew my line down to about 1,020 already. So this is why I make all my money during crashes because I like shorting the shit out of everything when that happens. I mean, even down to the first attack over here, we've got a lovely sort of 13,000 pips or points, which is beautiful. And all the way down here is about 25,000 points. Now, obviously, it's different depending on what index you're looking at. So here's the Dow Jones. Same thing from where we are now, roughly, to down for that first drop is 10,000 points, and then obviously you can then work out the other thing, as in the proper low, which I've already put down here. Now, there's a couple of things I want to show you. So first of all, the base trend line I think is really important. So when I say the base trend line, what you need to do is zoom out a bit and look at the weekly chart and then zoom out, okay? And so with a crash, you nearly always attack the base line, okay? So the base trend line. So in this case, if we go back to the 1990-ish and we simply extend the base trend line, it's gonna be something like this. Now, it's not gonna be accurate, so really it's gonna be a massive fat area. So it's going to be something like this. So if we just draw that base trend line, you can see the market overextended from this base trend line. It re-attacked it in 2009 and then it bounced off. Well, look where this base trend line is when we're looking at the Dow Jones. We've got a lot more falling. So let's say it's not as bad as I think it will be. I mean, we could see a falling down to anywhere around here. So I would say between 10,000 to maybe 12.5, but it depends how fast it plays out. So that's that. If we then go to the S&P 500, what I call the mothership, everything copies the mothership and the daddy ship. The daddy ship is the Dow Jones. And let's look at the mothership. I've already drawn the baseline over here, so let's draw that a bit more accurately. Let's make that a bit fatter because it's going to be lots of margin for error here. There we go. Look at that. Oh, look. And that also coincides with, that 1020 roughly. I mean, if it's like the 1929 crash and it drops 87%, well then we'll probably have a little fake out down here before it bounces off there. So this is what I'm looking at. I'm looking to short everything and make profit as it goes down, and then catch the bounce around here. So, and let's jump. So that's one thing that, again, I don't see many people looking at. Now, let's look at the structure of it. So we saw that 1929 great crash sort of structure. And let's have another look. Let's get the chart out again. And let's just zoom back a bit. So, like 2015 was a good day for me. But 24th of August 2015, I'll never forget it. It was Black Monday. And I was anticipating back then a massive sell-off, and guess what? We had that massive sell-off. Up until that point, that was like the fastest sell-off in history, and I made about 426 grand on that day, and it was great. And then we had this big old pump, okay, and look, it had a topping pattern. So for those of you who trade already, that's a double top there. And I said to everyone that was my students at the time, and also I was running a fund back then, that this low will be attacked. Now, I don't know when it will be attacked, but it will be attacked. And look, over time, it did. So from this bounce to this level being hit again, it took 116 days. That was a long wait. I remember that. Actually, it's not a double top. It looks more like a shitty triple top. But yeah, it did that. As in, it re-attacked that level. So now let's look at the subprime mortgage collapse. So I'm going to get rid of this. Sorry. Okay. My computer is playing up on me. Right. So here's the subprime mortgage collapse, as in 2008. So everything was ticking along. Now, if for those who are aware, like, the writing was on the wall around 2007, 2006. And so we had a whole bunch of, NDV, non-directional volatility, where, lots of volatility, but the market's going nowhere. And then what we had was this first shock move. So I think it was around here where I think everyone's looking at this 1400 line. and then it just sailed through it and was like, wow, that was a bit of a shock. So guess what? We had stimulus. So we had some sort of pumping. It created, how long was that? It wasn't that long actually. It was about 2 months worth of pumping. But then guess what? Well, that low was attacked there and again. And then it was game over. And then it was just a capitulation. And then you'll always see some sort of extended bottoming pattern. So that's the S&P 500. Let's look at the Dow Jones again. Go back to 2000, whereas 2008 is 2014. Here we go. You can see I look at these charts a lot. So here's the Dow Jones. We had that first big shock down here. We're like, whoa, what's happened? And then everyone starts pumping money into try and prop things up. And in this case, we had another re-attack. It didn't really bounce that high. But yeah, unless you called that the bounce, and then it re-attacked over here. And so from there to there, that was like almost 3 months pretty much, or 110 days, trading days that is. And then it was game over. It was like, see you later. And every crash is the same. So hopefully that makes sense. And I feel like I'm the canary in the coal mine at the moment, and I think everyone is basically really stock happy right now. They're like, everything's great. Now, although I am massively bearish in the medium to long term, it doesn't mean you have to then just short everything. And that's one of the biggest learning points I've learned over the last 10 years is that if you use fundamental analysis like I'm doing now, like, looking at all the macro stuff, then you must not trade it under any circumstances. Because macro stuff takes months and years to play out. So it's pointless me going, right, I'm going to short it. And I've lost loads of money doing that in the past. So for anything 6 months plus in terms of holding times, for 6 months or more, then yeah, for sure, use fundamental analysis, buy, hold, and forget. But if you're trading, like anything less than 6 months, or for me, my trades last like between a few hours to maybe a couple of weeks, depending what style of trading I'm doing. So I've actually been I made a fair chunk of money shorting this initial drop. And then I made a fair chunk going long, going short. In fact, I've been going up and down actually. So in fact, I'm long at the moment. If we look at some of what are my trades doing? So yeah, actually my Nasdaq is down a bit. So I'm shorting. Was it shorting? Yeah, I'm going longer than Nasdaq at the moment. I thought I'd see a little breakout, but evidently not. So that's that. So let's have a look at the chat box. So pandemic and 29 correlation. I'm just saying that we're in for an economic shitstorm, and it's not just that. So this, I guess, leads us to the next thing, which is MV. So a lot of people. Well, I'm just looking. So I've got the chat box here. So the questions are: pandemic and 29 correlation. How do you know that the market will perform similar way this time? Because it always does. Historically, the drop is between 70 to 90% drop. Yeah. So the thing is, if we go back to the charts over here, or not the charts, my thing here. These two things are misunderstood. So quantitative easing and money velocity. So a lot of people think, oh my God, look, the money velocity is going through the roof at the moment. They're printing currency through the roof. So if we just if I just type in MV Fred, 1 second, nope, Fred money velocity, here we go. So I use the Federal Reserve website. And if I just quickly look at the money stock, right. So I want to show you two charts which I think are very important, and you'll see which one is the most important one very soon. So what happens is, in fact, let's start with this. Okay, so this chart shows us the velocity of money. Now, I hate the term money because it's not money, it's the velocity of currency. Okay, only money that has been around for thousands of years is gold and silver. Everything else is currency. So this is the currency of velocity, and what it shows is how fast a single dollar is moving around in the economy on a quarterly basis. And typically, you've seen here since the 1960s, MV has been around 1.8 to 2. Okay, nice booming market over here. So what this means, let's say it's at 2, that means a single dollar will move twice, or there'll be at least 2 transactions of that same dollar twice within a quarter. Okay, and then what happened is that we had the 2001 tech bubble crash, and then we had a big old crash, and it was like, whoa, okay, MV starts to go down. We had a bit of pumping, and then that led us to the 2008 crash, where we had everyone called it the credit crunch, and everything froze. And guess what? Economies grounded to a halt almost, and they tried to print their way out of oblivion. But what happened is that all the problems that caused the subprime mortgage collapse weren't fixed. They're simply papered or covered over with this shitty plaster. So what's happened is that the world economies have been dying because the money velocity has been falling off a cliff. And so, I mean, in fact, by the way, we don't have time for it now, but if you look at my YouTube videos, I go through this. Look at the Macrometrics videos, and you'll understand this a lot more. But long story short, MV has dropped off a cliff. Now, MV, so this chart has everything baked and caked into it. Okay, so unemployment going through the roof. It's represented in this graph. Unemployment, jobs going. Oh, sorry, that's the same thing. Businesses going bust. Like every metric pretty much out there is caked and baked into this. So what this is showing us is that the US economy is absolutely flatlining, and when you get to 1, this is when it's game over, and we're pretty much at 1. It's like 1.104 at the moment. And so this is why people say, oh, it's fine, the vaccine will be around for COVID soon and everything will go back to hunky-dory normal. Wrong. I don't care what your COVID thoughts are. It frankly doesn't matter. If I had a magic wand and everyone was cured and it was eradicated from this planet, this crash is still going to happen. It always was going to happen around now. So yeah, MV. And one of the things is that people go, so what happens is, in order to try and stimulate the economy, they drop interest rates, hoping that people will start borrowing and lending more. But nope, that doesn't happen. And so they do the other thing that central banks can do. They print money. Or I say that with little bunny ears because they don't print money. But they do financial stimulus to try and kickstart the economy and get things moving. And so when you look at the currency, so this is the currency printing chart. It's just going up and up and up and up, and it's now going vertical. And no matter how much they print, how much quantitative easing or whatever they do, it's not going to mean anything, because until they can get MV up, it's game over. So this is super, super important. And people go, oh, they're doing so much financial stimulus, there's going to be massive inflation. Well, yeah, they will. I see hyperinflation in a massive country at some point. But we will not see that for a long time, not until MV starts spiking up this way. And I don't see that happening for a long time. The only way they do that is if they were to give some sort of UBI, universal basic income, to everyone, and go, right, everyone gets £500 per month, but it has an expiry date of 30 days. So, yeah. And if that happens, and if the government gave you 500 quid a month for free, and you had to spend it, or it's use it or lose it within 30 days, guess what you're going to do? You're going to go spending. And that's the only way I can see MV going up. And yeah, so that's pretty much the only way to save the economy, really. Helicopter money with expiry dates. So that is that. And so what we're actually going to see is negative interest rates in the modern developed world before we see big interest rates. So I can't see rising rates for a long time. Not until we've seen sustained negative rates for a while. So that's MV and QE. Any questions on that so far? Okay, so let's move on. Now, I'm just going to make a little tick just so I can remember. So we've done that, and we've done that. So now let's look at some low risk, high probability outcome setups. Well, I'll say plays and trades. When I say a play, it's like a big long-term play, and trades are sort of short-term stuff. So if you're looking for very low risk, high probability outcome plays, it's pretty simple in my opinion. You short the markets, okay? You bank, like this is if you're going to do a set and forget, okay? So let's just get the Nasdaq. So Nasdaq is the one that has the highest to fall, like, because it's sailed way above the COVID highs, or the pre-March highs, and it's got all of this way to fall. So obviously we've got a whole bunch of different trend lines here. So what you could effectively do, and there is a bit of a bubble in the tech sector. So you could simply short the market. Now you can short in different ways. So yeah, QE stands for quantitative easing. It's just a fancy finance term for we need to print our way out of oblivion. So you could, now it's somewhat risky because you could fund a trading account and then you could short the market and then you could leave it. But the thing is, if you do that, it's actually a little bit risky because with FXCM and with any sort of spread betting in platform out there, or especially for spread betting, is that when you leave a trade, there's a thing called rollover, and you can have positive roll and negative roll. So for example, do I have any trades out? Oh no, I haven't got anything that's rollover. Okay, so if we look at my trading account here, so you see this roll column. So what this means, so I've had this dollar Swissy trade open overnight. I don't know how long. When did I open it? I opened it 18:45, so 2 days ago. So as you can see, I'm shorting it, but I've got effectively a charge for holding it. So basically, the longer I hold on to this trade, I'm going to be charged some fees to basically keep it open. Same with this one. I've got gold that's been open for probably a day or two. Now, sometimes you get positive roll. So, for example, I've been shorting oil quite a lot recently, and some of those trades were running for quite a while. I had positive roll. So, actually, you could. I'm not going to get into stop losses and stuff like that. I think I'm not sure. In fact, I don't know what your knowledge level is. But yeah, so let's go back to this one. So yeah, for me, I'm basically going to short stuff. So when things are confirmed that they're rolling over, I'll then be doing a whole bunch of trend trading strategies to basically just short it and can ride it all the way down. So the other one is oil. So oil, yeah, I said this in August to my students. Let's get rid of that, remove that. Oil has zero. It shouldn't be up here. It has zero reasons why oil is up here. We have a massive surplus of oil all over the world, and it's inevitably going to crash again. So it's yeah, and as I said, a very high probability target is the $20 level. I think it'll go lower. Over time, over years and years, it's going to go to 10 and $5 to $10 and stay there for a long, long time. But in the short term, short to medium term, I see this level being taken out again, $20. And so what you could do is if you had pure risk capital, you could fund an FXCM account, put that risk capital in that account, and then go short and then leave it. And it doesn't actually hurt you no matter how long you hold it. And so even down to this level, there's 2,000 odd points. Now, obviously, you need to have enough margin in the account so that if we do have a random spike up to $45 or even $50, you're not stopped out, or your account isn't blown up. So yeah, so there's some plays. In fact, I've got another question here by Tayfun. Do you notice similar patterns with the FTSE as well? Okay, so this is interesting. With the FTSE, so back in April, March, when we had this first shock, I did a whole bunch of live streams to everyone saying, hey, we're going to attack this level again. We're going to have a stim pump and then it's going to roll over. And typically we roll over at the 50% level. So if we find, where is that 50% level from top of drop to bottom of drop, that green line, yeah, so here on the S&P 500, that 2,800 level, if I get rid of this now, this was the 50% line. And I actually expected it to roll over from here. because I looked at this topping pattern. Oh, look, double top, yeah, sweet. And then I got burned. Yeah, I did get hurt from that trade there. And so I've been wrong and right, because if we look at the FTSE, what's happened is the FTSE's done pretty much exactly what I said it would do. It's basically retraced to 50%, and then it's slowly rolling over. I had a nice little trade on that this morning. And eventually we're going to take out this low. When? I don't know. I mean, at the moment we have all sorts of election bollocks going on, so like it's trading indices is going to be cutthroat. So yeah, the German stock market that also rallied heavy, but the ones with minimal with minimal pumping were mainly the European ones. So if you look at the Spanish stock market, that's been a bag of balls, and then the French stock market, same shizzle. So it's just resting on this little trend line here at the moment. It's actually a bit lower, like that. Yeah. So they're the main ones, and also I wouldn't do it via FXCM, but I would simply buy, hold, and forget crypto. I see a massive hype bubble coming along with crypto, and people rushing in like they did in 2017. So buy, hold. In terms of, so this is the bit I didn't really want to go into today, as in potential trades, because being a trader doesn't mean you have to be right all the time. I really couldn't give a shit if I'm wrong or right. In fact, I'm wrong quite a lot of the time. But the thing about trading is that I'm in this to make money, not to be right. Okay, so there have been times where I've been like, yeah, I think I'm going to go long and whatever. But then guess what? Things change, the market shifts, and I quickly realised, okay, my original thesis was wrong, and I actually need to go short. And so this is why I hate, and I don't text out, trades on Twitter and stuff, because they have no context. They don't know what strategy, what time frame I'm using. They don't do any of that. So that's why I'm actually reluctant to do that today. So I think I will just leave it on the plays, because obviously the trades really dictates on what style you're doing. But yeah, I'm happy to take any questions about this later. Right, so let's move on a bit, and now let's look at, in fact, can you all still hear me? I've been talking for about 50 minutes straight, and I'm not sure. Can you all hear me? Don't want to... Yep, you can. Cheers, Kay, Tayfun, nice. Right, let's clear that. Let's move on how I manage my trading life. So if we zoom back out, so this is the wealth generation journey, and then it talks about cash flowing assets eventually, and now we need to look at trading. So here is how I manage my trading life. So if we just go sideways a bit, so if we then effectively get a magnifying glass and have a look at my trading, the way I do things is slightly different to everyone else, because I have my group. So I have basically so I've got 9 limited companies up here in my group, and my businesses make profit, and that's what I call first order profits. And what happens is I reinvest all of those profits back into the business. Okay, so I'll continue to reinvest in the business, or if there are profits to be declared at the end of the year, I'll disperse profits and just reinvest in the business, so I then don't pay corporation tax and all that sort of stuff. Now, eventually, the businesses are going to make surplus cash flow, and that's what I then call second order. And what happens with second order cash flow is that it then goes into my trading accounts, and I'm going to share with you that in a sec. And then eventually my trading makes profits, and then any surplus profits there I either take to buy some toys, or I'll just put other stuff. Okay, it could be anything, but typically I buy other assets. I'm obsessed with buying assets, other stuff. So this could be basically, it could be crypto, it could be other businesses to go back into the group to turn this into a nice flywheel, or I just leave the money in my trading account to compound and grow. So that's what I do in terms of my whole life. So really, when people say, "Oh, yeah, Siam, he's the realistic trader," yes, I am, but I guess I do this. I'm a wealth generator, as in I'm in the business of wealth generation, whether it's business, trading, or whatever. And so now when we look at the actual trading side, what I do is a bit different than most people, because I'm a big fan of having multiple accounts. But let's just boil it down to two main accounts, okay? So what I have is a DIY pension account. And I call it a DIY pension account because it sounds very scary and boring, etc. And what happens is there's no silly stuff that goes on in this account. Okay, so this is boring, mundane, really low risk, and also low return, or relatively speaking, low return. Because this is, if you gave me £100 million today, I wouldn't even hesitate putting it into this trading account, because I know I'm not going to lose it, because I have positive expectancy with my system, so they're positively skewed, and I risk very little. So what happens is I put basically 90 to 95% of my capital, my trading funds, in this account. Now these days, I don't even trade this boring account. I just have my robot. My trading robot does it all for me. 100%. So, and then I have a manual trading account. So this is where I am active, and this is what I call my crash account. Why do I call it a crash account? Because I crash it a lot. So what happens is, I may see a really good trade, or the robot will find a really good trade, and it will risk a really low risk trade, like 0.1 to 0.25% risk, and I'll be like, oh, that's a great trade, and then I'll basically go all in. Or not all in, I'll risk a bit more, so I may risk 5-10% on a trade. So what happens is every 3 to 4, probably once every 3 to 4 times a year, I will blow this up. So I'll put a bunch of money into my crash account. Remember, I've only got 5 to 10% of my trading capital in here, and I'll blow it up because a trade has gone wrong, I've gone all in and it just didn't work, whatever it may be. And when I say blow up, what I actually mean is I'll have a 50% drawdown. So I'll be 50% down. And the reason for that is that if you're, let's say here, you've got, a 10 grand account, and then you have a 50% drawdown, and you're now at 5 grand, so this is a minus 50%. In order to get back to break even, guess what? You have to make 100% ROI. So, most people make like 10% a year if they're a good investor. So if you have 100%, if you need to make 100% just to get back to break even, that's actually push you back 10 years. So you need to look at risk also in time. But the thing is, even though I blow this up a lot, probably once every 18 months or so, maybe I'd say 12 to 24 months, I will 10x this account or more. So I'll run an account, from 10 grand to 100 grand or whatever it may be, and then I'll simply redistribute the money back into this account or other things. So that's literally how I run my trading type stuff. So for example, this account here. So this is Trading Station. For those who are not familiar, I love it. I've used FXCM for over 10 years now. I've never really had any affiliations with it in the past. Just the only reason I use it is because the spreads are good. It executes really well, but the charting software is the tits. It's literally the best charting software on the planet, and I've said that for years. Like, someone tried to copy. Everyone has probably heard of TradingView. Everyone uses TradingView these days, and they're trying to make things good, but it's still a bit of an amateur trading platform, as in charting software. I still don't like it, and I have tried to get used to it, but it's not as functional. If I just move that away, whereas MarketScope, which is what FXM uses, is just really, really good. In fact, there's a really good trade here at the moment. Sorry, I've just happened to be on to Aussie Looney, and there's a nice trade that I really want to take right now. Let's just have a look. Okay, I'm not going to rush into it. So I want to show you This is not part of it. Let's just get a random Microsoft Paint out. So one of the things I do are breakouts. Okay, so the market could be doing anything. Let's say there's a key level, and then eventually the market will break out to the downside. And you don't know when it's going to break out, and you don't really care. I don't care. But the thing is, on a breakout, nearly 80% of the time, the market will always, or nearly always, pull back to this existing trend line. And this is where I go short. So I'll go short here, have a relatively tight stop. It'll then kiss off this trend line and then bugger off down like this. So that's one of the actual setups that I use. So in terms of a low risk, high probability outcome setup, this is beautiful. And this has actually got a high test candle here. So what's happened is that the market has been pushed up, and it's obviously hit a whole bunch of sell orders, and the bears have rejected this price. So it's then created it's what's called a high test. It's a wick with a tiny body. And so we should then see further falling. So if we zoom out a bit, where's likely? I mean, if this does continue falling, where is likely? I mean, this could be just, yeah. So we've got at least falling down to this level, I would say, where the next real resistance, next real support. So what you could do is actually set up a really nice trade here, whereby you effectively go short now. You have a nice, relatively tight stop, so I'd have it above this 9,400 level, so you have a nice natural level of protection. Sorry, I've lost. Oops, there's my mouse. Sorry, I've got too many screens here, and I'm struggling. One sec. Here we go. So what we can do is basically go short here. I'll place this trade so you can see actually FXM in action. So really, I'd want a 65 pip stop. So let's just write 65 pip stop. And I guess the general flow of how I place the trade is that, okay, what risk am I going to take per trade? Now, I've got this little testing account. So in fact, on this one, I'm just going to use 0.5% max risk. Okay, so 0.5%. For this particular method, so 0.5. And also your first entry into a trade, I normally make it a lower risk trade normally, because you don't know it's going to bounce. So there's no point going full hog in here. If it then starts going down, I can then re-enter and scale in. So let's just use 0.5%. Now this account I've got at the moment, this little crash account is about 120 odd grand at the moment. So what we do, so the way you do it is, or the way I do it is, I work out what's 1% of 120. You can divide that by 100 or times that by 0.01, whatever. Same thing. So £1,200 is 1%. So 0.5% is half of that. Sorry, it's at 600 quid. So I'm going to risk £600 on this trade with a 65 pip stop. So what I can do is I can simply either right click anywhere I want, or I normally just press this blue button down here. I'm going to sell it, and I put my stop loss in first. And I'm going to try and run this. I'm not going to put a limit on this. So 65 pips. And how much am I trying to risk? I'm trying to risk £600. So down here, you can see that if I go in at £20 a pip, it's not going to play ball. So I can then actually I adjust my position size to make sure I risk no more than what I want to. So I don't want to risk more than 600 quid. There we go. Hovering around that. Yeah, fine. So I'm going in at £8.91 a pip, and then okay, there we go. Trade is set up. I'm shorting the market here. This is on the daily chart. Got a nice stop above this, so it's above this resistance, and it's above this natural resistance here of the 9,400 level. So this is cool, and then I'll try and ride it down. I think what I'll do, just in case it nicely spikes down here, I don't think it will. But I will put a limit down here. So what I tend to do is I just add a limit. It doesn't matter. I don't really care where it defaults. And then I can simply drag and drop where I want the limit. And I'll probably just put it just in front of there. So there we go. But I will ride this down. And so that is pretty much my trade process if I go and place a trade. But yeah, and you saw the charts with the real life trade. And this is real money, by the way. This is not like a fake account. Yeah, yeah, you can see this is GBP real. And this account, actually, so this is my crash account at the moment. And what I did is, I think sometime in, what was it, August, I put 88 grand in this account. And in fact, let's just generate a report. So when did I do that? It was about August sometime. So let's just click any old date in August and then run a report. Come on. Yeah, I'm nursing a few bad trades at the moment, but I'm giving it time. It'll roll over, as in it'll come good. Okay, the report was downloaded. Open. So it then opens up this report over here. And so as you can see, all my trades. Now, if we go down, you can actually see the account balance. So yeah, so this was a random account. It just had some money kicking about in it, so it wasn't doing anything. So I then dropped in 82 grand. So yeah, we started with 88.5 grand basically, and then I started actively trading this to basically scale the account. And when was this actually? Let's look at the date. So this was the 8th of September. Wait, it's a stupid American dates. Yeah, so it's the 8th of September. I started this with 88.5 grand, and as you can see, if you just look at the right hand column, is just slowly growing. So you'll see that when you trade properly, you don't have any massive wins or massive losses. You have, it should be, consistent and gradual growth. So it's going up and up and up, and then yeah, so I've actually had a bad week because at some point I was at 135 grand, so I've had a fair bit of drawdown, but then I placed a stupid trade over here. And that was actually me clicking the wrong freaking button. I went to buy instead of sell, and that'll teach me for trying to place a trade whilst I'm trying to put the kids to bed. So yeah, and so at the moment you can see here that was the floating P&L. Yeah, so I've got that nursing at the moment, but the profit I've made about 40 odd grand in the last, or since September, from trading this. And what we can actually also do is check out the log. So one of the other things I wanted to stress upon is logging. So we've looked at how my trading life, and now we're going to have a look at logging, which is simply the holy grail of trading. I cannot stress enough, this is a crown of glory, by the way. Everyone's looking for magic holy grail of trading, like strategy or whatever it may be, but the holy grail of trading is logging. You absolutely must log your trades, because you cannot improve your trading if you don't have stats, and you don't have stats unless you log. So I don't use any joke ones like everyone looks at, was it my FX book or something like FX book, whatever, but that's been shown. I mean, that's Scammer Central on FX book, my FX book, because you can manipulate and game that so easily, and yeah, it is a bit of a joke. So I use Trader Prop Log. So was it traderproplog.com? Now, obviously, I've got a community of traders, so we've got it branded up for us, etc. So this is what it looks like. So the cool thing here, so this is not my crash account. This is I think this account is my bot account, or one of the accounts. Yeah, so it's a relatively new one. But as you can see, there's all sorts of stats that it gives you in the analytics page. Like how many trades this account has done, average holding time, all sorts of really good stats. And you don't get this unless you log properly. It shows you my top 5 winning trades by R multiple, my top 5 like I can look at some of my losing trades, and like I can just show, and it will then show me. Sorry, what's going on here? It should be a chart. In fact, it uses TradingView for the chart. Come on. Let's zoom out. So yeah, so this is a losing trade, minus 1R, and so what was it? I was trying to buy this, and then yeah, I got stopped out. So yeah, it's good. It shows you all sorts of other stats. But the other cool thing with the analytics side is that we have a community of traders. But as you can see, there's all sorts of stuff here. And so we got here in the teams all the realistic trader trades. So yeah, so there's like a little leaderboard. So here, most profit in the last 30 days. This is my manual trading account, my cash account. It's made about 37 grand since, well, what was it, September, whatever. So you can look inside that log. So if you do look in that, so I haven't actually updated this log, but what else? You can look at the money. So a bit in September, a bit in October, 109 trades, yeah, all that sort of stuff. So let's go back to teams, and yeah, you can look at others. So like written, one of my students has made a fair bit of chunk in the last 30 days. Matthew Smith, Matt Emerson, they're all doing a nice one, guys. So top performing strategy. So Anita. So Anita's this lovely lady in our community who she has a gut instinct and she's nearly always right. So if we look at Anita, we, in terms of her strategies, no, where is it? Analysis. Sorry. Yeah, so after 618 trades, she's getting a pretty good hit rate. Well, sorry, no. So her strategies, gut instinct. Here we go. So I can actually look into her gut instinct one. She's only placed 29 trades, mind you. But yeah, so that's nice. And she seems to be trading the Kiwi dollar. Sorry, no, pound Kiwi, sorry. Quite a lot. Yeah, so that's that. That's pretty cool. Again, you can look at, so with this, you look at any trades. So like click a trade and it will show the chart and what happened, so in and out there. So it's pretty cool. So anyway, make sure you log whatever you do. So let's move on to what exactly is trading, and this is really important. Right, so you still with me? We still got people here. Yep, we have. What's the website for the logging software? I think it's actually closed at the moment. I think, or not, as it's 1 second. I think it's predominantly just used by us, the realistic trader. So it's proptraderlog.com. So if we just Control C and go into incognito window, see what happens there. Yeah, I think there's a sign up. Yeah, my students have it for free, so it's, yeah. But what was I going to talk about? So going back to here. So yeah, what exactly is trading? Okay, so now we're getting into the nitty gritty. Are you all happy if I go into a bit more detail of some stuff now? We've sort of looked at the higher picture stuff. So what exactly is trading? So let's just get, now everyone thinks they know. Everyone thinks they know what trading is. They think, oh yeah, you just buy low, sell high, or sell high, buy low, all that sort of stuff. But it's not. Trading is literally two things. In fact, I'm going to type this because it's going to, whoopsie daisy. It'd be much quicker if I type this. So how do I text? Here we go. So 1, trading is finding a positively skewed system. So aka it has a system which is positive expectancy. So that's the first point. And point 2, you then have to flawlessly execute that system. I've looked at this, I've really thought about this for a long time, for many years now. If we make that a bit bigger. And this is it. Trading is literally, it boils down to these two things. Trading is simply finding a positively skewed system, so as in a trading strategy or algo that has positive expectancy. We'll talk about that in a sec. And then you have to flawlessly execute that system. Okay, so let's just double check I'm not going off on one. So yeah, so we're going to talk about expectancy and variance here. Whoopsie daisy, I'm just moving things around. So expectancy. So who here doesn't know about expectancy? In fact, I'm just going to carry on. I'm just going to imagine that everyone here has no idea what expectancy is, okay? But it's really essential. So the easiest way to do it, is, I guess the simple, for those of you who are trading, it's net R. That's basically your average net R. So, but the way I look at it is, yeah, let's do this. This would probably help. So let's move over here. Let's get rid of the writing. Okay, so let's say I give you a coin, okay? And you have heads, equally weighted coin, like a normal coin. It has a heads and it has a tails. So what is the hit rate of this system? So if you were to flick that coin, what's the hit rate? There are no catches. This is really me trying to check if you guys are still here. Okay, we've got Joe and Kay, the same 50-50. Leroy, Alex, yep, you're all spot on. That wasn't a trick question. So it was a 50% hit rate, okay? So that's pretty standard so far. I think we all got that, which is nice. I'll just clear the question board. Here we go. But the thing is, it's not quite as simple as that, because let's say we have a whole bunch of different intervals here. Okay, this is not to scale. Let's do it in a log scale so it's clearer to see. So let's do 100, let's do 1,000, let's do 10,000, and let's do 100,000. Okay, so if you got 100 people, or any amount of people, and you gave them all a coin and said, hey, flick this coin 10 times. This is the result you'll get. You'll probably get some people that got 10 heads in a row. You get some people that get 10 tails in a row, and then you get most people getting between maybe 4 to 6 heads in a row, and then a whole bunch of people that get 4 to 6 tails, okay? And then obviously everything in between. Because, yeah, it's 50-50, so most people will probably end up that, but you have some outliers. So you have, outliers that do 10 heads, 10 tails. Now, if you weren't as clever as you guys are, they'd say, oh, this is, like, whoever got 10 heads in a row, they'll be like, this is not a equally weighted coin, this is rubbish, you've conned me here. Vice versa. But it is. The only reason is that you have such a small data sample. So data sample is very important here. The data sample, so let's just put tiny data sample. And so you then have a massive range. And so this is what we can call variance in this example. So you have high variance. So tiny data sample equals high V. Okay? Now, if you got those same people to go, okay, well now flip this coin 100,000 times. What the results would do is this, very freaking quickly. Oopsie. Etc. So let's just say you had 100 people doing all the same coins, etc. And this is what will happen. And so pretty much by the end of 100,000 throws, in fact by the end of sort of 1,000 throws, you'll probably get the result that you're looking for. But let's just say after 1,000 throws, guess what? What is the variance? So you have really high or big data sample equals, actually it's doing green, low variance. Okay, does this make sense so far? I'm hoping that you've had experience of coins in your life and that you know it's 50-50 and that hopefully you've flipped a coin 10 times or more. So does this make sense? The more people you have, the more amount of throws you have, as in you have a bigger data sample, the lower the variance. And what this means is that this is what's called a neutrally skewed system. So neutrally skewed system. Oopsie daisy. System. And in trading speak, this is what's called zero expectancy. So what this effectively means is that for every £1 you risk, you expect to make £0 profit. Okay? Are you with me so far? Yeah, Marius is correct. It's basics of statistics. But you'll be surprised that no one knows anything about statistics, which is why everyone can be easily led by the news and falsely led by the news. Anyway, so let's move this on and let's talk about a trading example. So in fact, in this example, it's a neutrally skewed system. So guess what? you can expect to follow that blue line. Now let's talk about trading. Okay, I'm using a very basic example to explain trading. Expectancy. So now let's look at this. Right, so over here we have the 0% ROI. Let's put some little intervals in, same as before. Right, so let's say I gave you some of my trading algorithms, okay? Like my best damn trading system. In fact, let's exaggerate this a bit more. Let's say I gave you the Holy Grail trading system. It's the best trading system on the planet, and it had positive expectancy, like really good positive expectancy. So what this means is that over time, if you were to execute this trading system, you would get positive expectancy. However, going back to that previous example, if you had 10 people all placing trades using this system, you'd have some people that have, I don't know, let's just call this 10% ROI really quickly. And then you'd have some people going, wait a minute, I'm minus 10%. And then you'd have everyone in between. So this is what happens in trading. So people try to teach themselves how to trade, and they go to Google or Baby Pips or any of the other silly websites out there, and they teach themselves how to trade, which is absolutely reckless. I lost so much money when I started trading because I did that myself, and I made every mistake. And what happens is they go, so some people go, Siam, you're a freaking legend. Thank you so much. I'm 10% up. I've placed 10 trades. And I'll be sort of shaking my head inside. And some people will be going, I'm minus 10%. You've sold me a con or whatever. Or this is a rubbish system. But guess what? Over time, this is what's going to happen. And even these people that had a really bad start, they're going to get back to expectancy. But it may take time. I mean, look. It got to break even over here in this particular example. Some people may get to break even a lot faster if they go down. So it really depends. Okay, so this is so over here we have, same example, you have high variance, and over here you have low variance, simply because of the data sample. Okay, now so this is why you mustn't strategy hop, and a lot of people do that. They'll do a system or a strategy for a week, a month, or a couple of months and go, this doesn't work, let's move on. And then they'll continually strategy hop, and they'll never land on something, which means they'll never get enough trades in, which means they'll never get enough stats if they do log in the first place, which means they'll never ever become a profitable trader, ever. I see this cycle of doom always in everyone that I meet pretty much when in trading. There's certain things you just have to do, and if you don't do them, you'll never win at trading. So this is a positively skewed system, as you can see, this blue line. Now, there's a few things here. I'm just going to get rid of the green lines because I'm going to draw another example on this same chart. So a lot comes into this. So I guess if you were to look at volatility in your equity curve, come on, there we go. So there's a few variables. So if you were to have a system with a really high hit rate, so let's just say 70% hit rate, guess what? Your account curve, your profit equity curve will be pretty tight to the expectancy of the system, okay? Just simply because it's got a high hit rate system. Whereas if you had something with a 40% hit rate, it could still be positively skewed, but what you'll have is probably this. You have a lot more drawdowns, because with something like that, you tend to have sustained losses or not doing much, and then massive wins. So there's a bit more volatility in your equity curve. So that's, hit rate can affect, your profit equity curve. Another thing that you can do is risk. So if you're risking, let's say 0.25, maybe 0.5% per trade, let's pick a different color, purple, guess what? You're going to have a system, or your profit equity curve will be nice and gradual going up this line, which is nice. Whereas if you're, Billy Big Balls and you're going in at 5% max risk, or even 2% max risk, guess what? You're going to have something like this, and you don't want that. So that's just some things to be aware of. So basically, don't don't strategy hop. You need to find, and going back to what trading is, it's really simple. So number one, you just need to find a positively skewed system, and that's the easiest bit. That is by far the easiest bit. Number two is not easy. Number two is actually where people screw up. It's flawlessly executing that system, as in placing, like sticking to the rules, not breaching it, logging it like religiously, and doing that. And so that actually, when we look at the grand scheme of things, I haven't put anything about my bot. I'll do that now, because this is probably the best time to talk about a bot, because how else can you flawlessly execute that system? Well, robots. I guess it sort of does lead into realistic expectations. In fact, we'll do it over here, because what I found is that I was getting really, really annoyed of being a screen slave. I'm sort of talking about it down, and we're going to cover all of these at the same time. Let's just do that. So, in terms of realistic expectations, let's move this down. I would say, let's say there's you, and let's say there's a robot. I can't draw, as you can probably see, and you both traded now, and you traded the same system. Well, obviously it depends on the strategy you're doing and the time frame, but long story short, you are going to miss out. In fact, you're going to miss out on about, I would say, anything from 60 to 90% of valid setups, as in valid trades. You're simply going to miss out on them, simply because if you're a human, you are sleeping, you're eating, working, playing, you're not at the screen. So basically, every time you're not trading or looking at the screens or monitoring your charts, you're going to be missing out on valid setups. So obviously, if you're trading on the daily charts, you're going to miss a lot less. But if you're trading the 5-minute charts, well, then you're going to miss out on everything. But it's basically every time you're not by a screen, you're going to be missing out. And in terms of realistic expectations, let's say you're someone that's been trained properly, you've been doing it for a couple of years, you're proficient and you're safe and you don't break the rules. I would say realistic expectations could be between minus 5%, providing you are strict with your risk management procedures, upwards to 20%. So, and this is really important, because I meet so many people going, hey, I've got $5,000 and I basically want to quit my job and I want to make $3,000 a month. Okay, so let's just do the maths. And they want to do it with trading. Can you help me? And I go, okay, well, you want to make $3,000 a month from a $5,000 account. Well, let's just work out the ROI on that. Where's my calculator? So 3 divided by 5.6. So you need to make 60% ROI per month to achieve your goal. That's never going to happen. And so this is why I actually turn a lot of people away from my community, because I don't want get rich quick hunters. Because this is more realistic. If you're going to manually trade 5 to 20% per year, or sorry, minus 5, or hell, minus 10, let's just say minus 10% to minus 5%. Obviously it depends what your tolerances are, but even if you're having a great year and you're not breaking any crazy rules, like, you're probably going to get up to about 20%. So this is out of the question. You go and buy a lottery ticket for all I care. But here's the thing: if you put that same system in a robot, it's never going to miss, because it'll simply scan the markets 24 hours a day, 5.5 days a week, because that's what the currency markets are open for, and I'm a currency trader. And so this is why, simply because it never misses a trade, in terms of realistic expectations, you can actually expect minus 5% if you're really sensible with your settings. Obviously, with a robot, with the robot, it's two things. You have a robot which flawlessly executes stuff, but what you put in really matters. So if you put 2 systems in him, so 2 algos, and this is a good algorithm, well, guess what? You're going to get money. If you code up a shitty system, like a negative expectancy system, guess what? The bot is simply just going to chuck out bad trades. So you have two things with the bot. You have the algorithm, and also the bot. They're two different things. So if you have a good algo, it's nice and gentle. I would say anything from -5% to, I would say, plus 50%. And that, it sounds crazy, but that uplift there is simply because it never misses a trade. And it's a massive eye-opener for me, because for about 10 years, I've massively hated robots because I've never got them working. I found they were all a bit of a con. And then, machine learning is the magic ingredient, which has been really, I guess, over the last couple of years, machine learning has become more accessible to coders and stuff. So, for example, let's, in fact, I'll show you. In fact, I guess this is the same thing. So, realistic expectations, and then how to stop being a screen slave. And it's simply by getting a robot. Now, with a robot, actually, or in fact, if you're talking about my robot, which does 99% of my trading, you have two settings. So you have semi-autopilot and full autopilot. I'm just going to put auto there. Okay, so let me explain what semi-autopilot is first. So let's say we code up a good algorithm and we put it into the bot. And what happens is that the bot will give you, its own, here we go, you've got your own Telegram here. So as you can see, this bot is constantly sending me trading alerts, okay? So it's not human, it's just flawlessly executing whatever I've coded it to do. And guess what? It's sending me trades when I'm not even, like here, today, it sent me 2 trades, one in the morning, and 7 in the morning. I was asleep for both of these. And so, I'm talking about semi-autopilot. Yeah. So it will send you a text. And so you simply click it. So, hey, Siam, I've portfolio BB, full blah, 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 blah. Would you like to take it with this much risk? So you simply click that. And then open up the chart. So whether you're on your mobile phone or laptop, and it will show you the setup. So here, it wants you to short it here, stop loss up here, take profit here. And as you can see, it hit target pretty much straight away. So when you see this, there will be a yes and a no button. So press yes and it will place the trade and manage it for you. If you press no or ignore it, nothing happens. So with semi-autopilot, can you see that, yes, you still have control, but it basically stops you from being a screen slave, and all you're doing, your trading simply boils down to pressing yes or no on a text message. And this is revolutionary. I mean, it really is revolutionary. I'm trying to find a picture because I don't personally run the semi-autopilot. Is there a picture I can find for you? No. I guess, yeah, here we go. So that's what it looks like. So if you click on your phone, it will show you the trade, press yes, press no, and it will sort the trade out for you. So that's pretty much what it looks like on your phone. So full autopilot, as you can probably imagine, is simply the market. The bot will scan the market 24/5.5. It will find a trade, like so. It will find a trade, and then instead of asking for permission, it will just place the trade. So yeah, auto confirmed, place the trade. And here's another one at 7 in the morning. It already placed the trade. Is this a winner or is it a loser? Let's have a look. And you see here, auto confirmed. And this one hit target today as well. So that was nice. And what is this? This is, yeah. So this is using a system called the Bolly Bounce that we have. So it's pretty cool. So as you can see, my DIY pension account, I do bugger all because it's simply doing it all for me. And even if we really scroll right back and I'll just pick a random trade, here we go. It'll still show you what happens. So here you can see it's auto confirmed to, and it will then go back to what happened. So here it was it got stopped out straight away, and then you can see what would have happened. And by doing this, you can really analyze your trades. So in fact, I'll show you the bot. What's the time? Shit. How long have we been going? An hour and a half. Okay, well, we won't go too much longer. Okay, so are you all still with me? You okay for another 15 minutes or so? Yep. Cool, nice. Oh, and Marius says, does the Holy Grail of trading exist? No, it doesn't. Well, I guess if you own a high frequency trading firm, that's as close as it is to Holy Grail. But for us mere mortals, us plebs, us plebeians, the Holy Grail of trading doesn't work. It's like asking for a magic sweet that is tasty, yummy, fulfilling, and doesn't cause tooth decay and diabetes. So that's semi-autopilot and full autopilot. So what we have in the bot, if I can open it up here, is that I've effectively coded up two, well, not me, I'm not the coder, two algorithms. So we have one called the trendy jibe, the TJ, and one called the bolly bounce, which is the BB. And what I've done is I've made it so they're complementary. So the TJ is a really simple trend trading system. I've been doing it for years. It's my favorite system. Okay, so it does really, really well when the market's trending down or up. But normally at the bend at the end, when you have, choppy markets or even a reversal, guess what? So you'll be winning, and the last couple of trades, probably boom, as in you'll be stopped out. Okay, because it's the bend at the end and it normally stops you out. So good when trending, not when it's choppy. But we then have the bolly bounce, which is a choppy market one. So effectively, it'll go buy, sell, etc. So it's great when things are going sideways, but let's just say it starts to do this. It'll go, okay, let's sell it here, but let's say that happens, or guess what? You're going to end up losing a trade. So the losing trades are typically, so for the bolly bounce, that we lose a trade when it starts to trend, but it doesn't matter because the TJ goes, ooh, hello trend, I like you. And over here, where at the end of the trend, the bolly bounce is like, hey, game time. So they sort of complement each other. And what I've got here is that I'm going all over the place, but what I tend to do is that when people are learning to trade, I say it's a 2-year play. I'll get back to the bot. I'll explain why. And the first reason why it is really a 2-year play is because when you look at the whole year of trading, so from January to December, there's about 3 phases. So you have the beginning of the year, springtime, where you have a fair bit of volatility because it's brand new year, new me, all that sort of stuff. But then around May time, it goes quiet because all the big boys go on holiday to St. Bart's, Lucia, Monaco, all that sort of stuff. And then September, October time comes around and they're like, whoa, let's get our year-end bonuses, and volatility goes nuts. So that is a full year cycle. So you can't say that you're a good trader or profitable or consistent until you've at least done a full year of live trading on your own with real live money. So it's really So what I tend to do is there's a massive learning curve, lots of learning, but you should do 2 things. So whilst you're learning, we set you up on a dummy trading account, so you can trade the real life markets with fake prices and then hone your skills in a risk-free environment. But in order to alleviate the pressure, what you can just do is just open up a live FXCM account. We have so the bot works with a special type of FXCM account because it's constantly working. The server costs, like the bot's costing about 10 grand a month in costs. So it is expensive to run. Live bot. So with real money. So what happens is the bot will simply tick along and make profit as you learn, and then you can learn in slow time. So that's the learning journey. Now, when we first set you up with the bot, we recommend to go to the strategy factory and just get the full autopilot TJ and full autopilot BB. The main reason is that you don't know how the system works, so there's no point doing semi-autopilot. And it's really cool because if you look at these, there's so many different things you can do. Like you can choose what markets you trade, the time frames you trade, the trends, the indicators. You can choose how big your stop loss is, or you can just let the robot choose because it'll know what take profit you want, the risk, whether you do dynamic risk or set risk. You can optimize it for expectancy or a hit rate, and then you can do little tests. So for example, let's do a little test. A few tweaks need to happen with that strategy test. If we just wait a moment, it'll crunch the numbers. So yeah, it works on a spread betting account. So here we go, and you can see the the CAGR, the compound annual growth rate, etc., the hit rate and all the stuff. And you can even, like any of these trades, it would have done 2,000 odd trades over since 2011, etc. And you can click on, let's click on a losing trade, and you'll see what happens. There's a lot of winning trades there, but there we go, and that was the losing trade back in 2011. So it's really freaking cool. Now the thing is, I have to admit, these two here are optimized for safety. Okay, so they're optimized for safety, not for profit. So the reason being is that I'm trying to cover my own ass here, because so a lose-lose situation would be if you came on board, got hooked up with the bots, and then you lost loads of money. That's a lose situation for everyone. So these two settings are really, really safe and dull. Okay, so they're optimized for safety. You're not going to blow up your account. It's just going to slowly trickle away. So when I created these two systems, I actually obviously connected it to this log, and so this actual account here is the boring bot. So as you can see, the boring bot, August. So it started August. Yeah, and it's been 3% up, minus 1.62%, and it's 0.83% up at the moment. It's done about 83 trades. It's just ticking along. It's not lighting the world on fire, but it's not lighting my money on fire either. And you can see the 12-hour chart is doing the best one. So yeah, that's pretty cool. However, we have a leaderboard, and this is the most important thing, because obviously eventually when you learn how to trade properly, you can go to semi-autopilot, or you can tweak the bot to your liking. You can start optimizing your own bot for profit. And so if you look at the leaderboard, here we go. So this is the trendy jibe return, and you can see the leaderboard. So these are my students, and it's real money. Okay, so these are live accounts. So Shane at the moment, so there's a few things here. One, you need to be aware of data set. So you remember over here where I talked about big data sets or data samples, etc. It's the same with trading. So in this particular leaderbot, Shane over here, who's winning, has only done 27 trades. So it's not insignificant for this amount, for the bot, for the time it's been around, but it's not the best. But as you can see, he's 12.25% up in real money right now, and he's on track for a 30% year, as in CAGR, his compound annual return. He's only had a maximum of 5% drawdown, which is nice. Yeah, and everything else is fine. Sharp ratio is great. Or this one is. But yeah, so it's good. But a better one to look at, I think, in my opinion, would be Kevin. So Kevin's done 178 trades, 9.84% up right now, and he's on track for a 15% year. And this is, I think, in the normal settings. So that's that. And we haven't had too much of trends. There's not been that many trades. And so that's that. But look at the Bolly Bounce. The Bolly Bounce has been on fire recently. So it's a relatively new one. So, but look at Shemile here. He's done probably the most, I think. So Shemile is actually just doing the set settings. And in fact, most people are here. They haven't really tweaked it much. And look, he's 11.52% up right now, and he's on track for a 64% year. I'm going to slightly ignore this one up here for the moment, because he's only done 22 trades. So what I actually think he's probably done is whacked up the risk in order to... he's probably betting like 5% a trade or something. I don't know. But yeah, but even the one below, like here, Simon, he's done 54 trades, 8.91% up. He's on track for a 50% year. So can you see what, like, some people I'm pretty sure probably scoffed when I said, you can make 50% a year from trading. I'm like, I mean, there's a time where I would have gone, yeah, whatever, con artist. But these are real accounts, real money, real people. And as I said, you can check on people. So I'm hoping, this is probably where this example will probably go wrong. Let's try and find Shemile, view all members, search. So I don't know whether Shemile has, here we go, has connected his bot. No, he hasn't. 0 trades. Okay, so not everyone has. What about Kevin? No, sorry. Let's go back. That's back again. Kevin. Here we go. View Kevin's log. Analytics. He's got some here. Okay, so this looks like a new account as well. Okay, this is not his bot account. Interesting. Yeah, so he's probably got a separate account here. Anyway, so hopefully that makes sense. So where were we? Stop. Okay. Any questions on the bot before we move on? And how I mean, this is all I do with my bot. I just let it run. No? Okay, yep. Feel free to ask a question. I'll just go on to the good brokers and bad brokers. So I am, if I draw a line down here, good brokers and bad brokers. So the reason so good brokers and bad brokers is interesting because I used to use a bad broker, and it is absolutely crazy. So if we just mark it, and by the way, what I'm about to explain is completely, I'm really simplifying a lot of things here, but it does. Yeah, the simple answer is fine. So if you have a broker which is a market maker, so typically it's not in your interest, because what happens is you will place a trade, it'll go to your market maker broker, and most of the time they'll go, oh, actually this person is most likely to lose, so we're not going to bother putting the trade onto the real market. So they effectively take the other side of your trade. And so guess what? If you lose a trade and you lose, I know, 100 quid on a trade, guess what? That money is simply pocketed to your broker. So so there's an incongruence or alignment, unalignment of interest here, incongruent interest, because if you lose money, they make money. And I think really the best case scenario for a market maker, or I guess any broker, is to have someone which is break even or maybe slightly profitable, because then you're going to be trading for a long time, and they're going to make them, they'll make all your losing trades, but they'll also make the spreads, etc. So that's a market maker. And I used to trade with a market maker and I didn't know, and then I realized, oh shit, what happens is some market makers, they do spread hikes. So overnight, what may happen is that the spread of a particular asset may go from, I don't know, 2 pips to 20 pips in the split second. It'll stop you out because you've been spreaded out, so to speak. And then the market carries on going. And you're like, what? The market never touched my stop loss. Yeah, but you got spread hiked. So, and then you have an STP, which is a straight through processor broker. So I'm not going to name any bastard brokers, but I'll name a good STP broker, and that's FXCM, literally who I use. Again, I've been using them for about probably 10 years now. Because what happens with an STP broker, you place a trade, it goes straight into the market, and it doesn't matter whether you win or lose the trade because they're hedged. And so they'll only make money from the spread and commission. Spread or commission. There's lots of different types of account. And what you'll find these days is that actually a lot of brokers, or some big brokers, they're both. So there'll be a market maker and an STP, and you can choose. And what you'll probably find is that a market maker will have better spreads, better commissions, etc., and people flock to that. But I would simply ignore it. Always choose the STP broker as inversion. So yeah, so that's the broker bit. So there's a question by Marius: how difficult is it to create and adjust the bot to succeed? Freaking nigh on impossible. Like, I've tried for 10 years, and in the end I found a coder who was good at machine learning and all that sort of stuff, and he's done it. But I've lost a lot of money doing bots. Yeah, so this is why me and my students just use this bot, because it is really, really good. So yeah, and as you can see, this is just showing you the trading journal for all the different bots running. So they're the 2 winning trades that we had today. Losing trade, was it yesterday or 2 days ago here? But yeah, and even with a good system, look, I had an 11 trade losing streak the other week, and that was like, what is going on? But it happens, and you will like the rates that we're getting are, our hit rate is about 40 to 50%, and so you will have losing streaks and also winning streaks. So like here's a nice winning streak. So yeah, that's that. What other questions are there? Let's go back to this. So does anyone have any questions? Because in terms of the I've got a treat for you guys. So I don't know when you want to hear that, but let's go through some questions first, because in fact I'll share with you the treat, and then and I'll do the Q&A. So in the meantime, if you have any questions, please pop them into the box and ask away, and then I can go through your questions. So here is the treat. What I am going to do, because this is, I guess, an FXCM sort of temporary partnership, maybe, I don't know what this is, but I'm working with FXCM at the moment. I'm the realistic trader, and FXCM is my broker, and so they want to give you a little treat, and I will also want to help you with that treat. So what I've done, and it's only going to last for a month. We're going to do a little month experiment. So I have just created, literally today, if I go to my group, I think it's there. So I've actually got my normal realistic trading group, and all my students are there. We ask questions, do live sessions all the time, and yeah, it's really cool. But what I've done is, come on, kid, groups, see more. Here we go. Realistic trader FXCM treat. Excuse the cheesy grin. That's me. And so this is only going to happen or work for. In fact, I'm just going to take a little screenshot, and then I'll go into the doodle pad. And where is my doodle pad? Okay, here we go. So let's. And by the way, FXCM doesn't know this. So so is anyone from FXCM here today, watching or listening to this? Because what I'm about to share is they're not aware. I said I'd do a little treat, and I haven't told them about it yet. So, but they'll be happy, I'm sure. So here we go. So the treat which I'm prepared to do, because I also get a little thank you from FXCM if this works, and it's a win-win, as you can probably imagine. So you guys, so however 20 odd of you here, you're going to be invited to join this free Facebook group. Okay, so simply go to Facebook and search for Realistic Trader FXCM Treat. So apply to I'm literally the admin here. I'll simply admit you. I'd say yes, and you'll be in the group. Okay, and this is for 1 month. Okay, and this, by the way, this is irrelevant if you already have a trading account or not, because what we're going to do, 1 month only, and then I'll simply just delete the group, and then delete. Okay, so we're just going to delete. And what we're going to do is, in this group, I'm going to, probably once the dust has settled, maybe next week or the week after, I'm going to hold another live session inside that group, and live stream bot setup. Okay, so what you'll find in that group is I'm going to share a link of how to open up a brand new FXCM account that is compatible with the bot. So what you need to do, if I go to that, type in this, here we go, whoopsie. So if you click on this, if you go to rebrand.ly/FXCM free account, and I'll simply Control V that into my browser so you can see it. There we go. Now if you get some weird warning thing, it's probably because you got an ad blocker or something. Earlier on I had like this weird, are you sure you want to go to this website? Well, it's fine. So, and then all you need to do is go through the steps of going to your United Kingdom, I'm presuming, platform, and you need to click MT4. So, oopsie, wrong one. Let's move this down actually. So just to keep it simple, so you're going to click the UK bit, you're going to click MT4, and then you can go begin application. So it needs to be a fresh new account, and a live account, and then you go through all your bits and bobs, okay? So just go through all of this, be truthful, etc. And then you need to fund the account. And what's going to happen is, in this live stream, I'm going to set you all up. So we'll probably give you guys some time to get the account set up. So this will probably be in like 2 weeks' time. I'll liaise with you guys in the group, and then I will simply go through the bot setup with you, and I'm going to give you 1 month's free bot. Okay, so my students are literally the only people that get access to this bot with my algorithms, etc. And they pay a lot of money for it. So, but you'll have full access to the bot for a month. So we'll get you set up, and then you can play around with the strategy factory. I mean, you can have the default settings, you can choose what you want, and basically you can optimize it. And the cool thing here is that very soon, if you look at this leaderboard, we have auto copy and auto follow. So eventually you'll be able to see what settings Shane is using for his TJ, or let's say what settings Shamal is using for his volley bounce, etc., to get these returns. And then you can automatically just have those bots. So that's going to be pretty cool, and that's very soon. Yeah, and then during that, and in that month, so we'll get on this live stream, we'll get you set up using the bot. And in that you'll be connected to your Telegram group, because you get your own personal bot Telegram. So whether you have it on full autopilot or semi, you can play with it, and hopefully, and here's my hope. Again, I don't like using hope because you have no control. I hope it all ends in smiles. So because you'll like the bot. So I guess in terms of the financial stuff, is that my hope is that if you like it, and I'll be sharing other bits and bobs. I'll be sharing some market updates, my trades as well. So I've also got another Telegram group. So if I show you, if we go to Telegram, I've got a realistic trader Telegram. It's just one way only, but as you can see, I'm constantly posting this of like potential setups, etc. So for example, I did one today. Where was it? Here. Yeah, it was the FTSE. As you can see, I saw the FTSE was going to bounce off this trend line here, and I went long, and I had a target at 5,900, and guess what happened? Let's oh look, my trade that I placed earlier is in profit. Oh, only a tiny bit. UK 100, here we go. Check that out, and it hit the 5,800 level, 5.8. So yeah, and I do stuff like that all the time. And so in this Facebook group, I will also be sharing all my trade updates, etc. So yeah, in my hope, so I think this is, if you're wondered what the commercial things are, FXM would like you to have a new account, which you're using, and I would like it if you like what you see, maybe, and if you're prepared to actually learn properly, because we have a pretty intensive training course, you can come and join our community. So hopefully that makes sense. So yeah, find the Realistic Trader FXM treat. Maybe there's a link. If I can actually find a link for it, that'll probably be handy. Stand by. Let's go to groups. See more. Right, there must be. I'm not that familiar with all this sort of stuff, but I'm sure there's a link here somewhere. Oh, here we go. I just copied this bit here. So in the chat box, send to all. You can fund the account. Oh yeah. So I'll go to the questions in a minute. So let's send to entire audience. Hopefully this link works. There we go. And then I can also, if I copy this one, in the chat box, you've probably got another link here. So hopefully you can see that. Yeah, let's go through the questions now. So, how difficult is? Oh, so I answered that one. How much does it cost to use the bot system you currently use? So, what I run the bot, so it's cost me about 10 grand in server fees and stuff like that. But my students, what is it? It's about £4,800 a year. So it's not cheap, but it's expensive. It's not expensive either, because Like for example, in fact, yeah, I've got a WhatsApp. My friends, I also text out that trade and other stuff. It's like, hey, my mate just got, 2.5 grand this morning from that FTSE trade. But yeah, so if you go to the realistic trader, it's £4,800 a year to have access to the community and everything. So that's that. Do you have any other webinars scheduled? I don't, I'm afraid. Nope. I already have my account with FXCM already. That's fine. We just need to set up a new one, and then for the bot, because it has to link up. Because in that live stream in the group, I'll be going through how to actually set up and connect this fresh account to the bot. Please type in chat link. Okay, hopefully that worked, and you got the chat link. What is the minimum credit for the new bot account? So this is a good question actually, because what you mustn't do is have the account and then because what will happen is that the bot will try and place a trade, but if there's not enough money in it because there's no margin, then there'll be not an error, but it just won't place the trade. So I would say at least I'm just trying to think from a margin point of view, because you'll probably be going minimum position size. So like each trade will be like 8p a pip. I think, yeah, I would say between £500 to £1,000. Okay. And don't worry, this isn't like you're not going to lose it. That money doesn't go to me, by the way. That just goes into your own FXCM account. You're the only one that has control to it. Only you can touch it. And in fact, with FXCM, they will only withdraw money to the account that you funded it with. So yeah. But yeah, just putting that, you're not going to blow it up, because the bot settings you use, which I'll show you in that live stream in the group, will be super. It will be the standard settings that I use, the really boring ones. So that's that. What's the minimum fund account? Oh yeah, Jamie had the same one. So does anyone have any questions? I think we covered quite a lot today. So I'm hoping that did you guys learn anything new? I'm hoping that you did, and it wasn't a 2-hour waste of your time. Load super stuff. Learn quite a bit. Ah, lovely. I'm going to turn my screen off and turn my face on. Can you see my face now? I don't know if you can, but yeah, this is me. I'm a real person. But yeah. Right, so it's pretty much almost 2 hours on the dot, I think. Any last questions, or forever hold your peace? And make sure to apply to get into that Facebook group. I've got loads of tabs open right now. And what I'll do is I'll simply admit you in, so to speak. So yeah. Okay. Cool. And you all got the links, the Facebook link. Nice. Oh yeah, so Marius, do you trade any currency pairs, or you focus on several favorites? I trade everything. Literally. So if we look at my... Oh, and you can't... One sec. I'll share my screen again. Stand by. This one. Hopefully you can see my charts. Yep. Can you? Yep. So this big old list, I trade everything. So I trade all the currencies, pretty much all the majors and minors. I trade the indices, so the main stock markets, and I trade a couple of commodities like gold, silver, oil. I've got a really bad losing trade on my gold right now, but that's fine. Yeah. So that's that. And then also in the live sessions that we do, people always ask me, well, can we have a look at Bitcoin or Ether or whatever it may be? And I'll look at it. So like here, someone asked me about Tesla the other day, and I said Tesla's in for a bit of a drop. Again, look at this main baseline. It's like a void. It's like a vacuum. The market will be sucked into this void. So at some point, we're gonna see the market be sucked back to this level. But yeah, I'll always analyze any chart you want me to. So that's that. Oh, we've got a few new questions. Lovely jubbly. Do you trade? So that's that. Yeah, it's great. Thank you. You said we need to open a new FXCM account if we have one already. A whole new account with them, or just a new MT4? Yeah, it's a new MT4 account. So if you, in fact, Yeah, it's a whole new account because it needs to be a fresh one for the bot. Yeah. So if you just go to that, what was it, Rebrandly, that one. So if you just go to that rebrandly.ly / and then open up the account that way, and there will be a fresh new MT4 account. So that's that. What strategy would you suggest for small accounts, say 1 to 2,000 without a robot? I would. So there's millions of different strategies out there. So personally, I would have a handful. So you need one which is good for trending markets. So it could just be one that So you could just do like a really simple one, for example. Like I mean, the type of strategy doesn't really matter. Like for example, I'll tell you now that one of the two main moving averages I use is the 8 and 21 EMA. I've used them for decades now. So can you see that when the market trends, it adheres to the 8 and 21 EMA pretty well. So when it's going down, look at this one. This, as it's going down, is adhering to this nicely. And so what you can do is when it's trending, you go short when on reattacks of the moving averages. I mean, that's just one simple thing you could do. So that's that. And then you should also have a ranging one. So when the markets go choppy up and down, like sideways moving, you need another one over there. So you're covering most market conditions, but there's no set one. I'm afraid, and that's a bit like saying to a dentist, what is the best way to remove a tooth that you'd do if you had a, whatever. It's just a massive question. It really is. Tayfun have to have Facebook account to access link. If you don't, oh yeah, I'm afraid. All my updates and stuff will be in that group, I'm afraid. Cool. Rightio. That is it. That's 2 hours. I don't want to hold you any longer. It's Friday, I'm aware. So thank you very much for your time. It's very much appreciated. I'm aware that it's Friday afternoon and yeah, you've sacrificed, other things to be here. So thank you for your time, and I guess I'll see you in the group. For those that come to the group, you get literally a whole month of free bot and updates and all that sort of stuff. Toodles. Thank you. Okay, FXCM admin. I don't know how to close the webinar. If you can do that.
Thank you very much, Siam.
Yeah, no worries. Hope it was fine. Cool.